everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our Big Six markets and formulate an attack method for tomorrow's trading so we can come in tomorrow as prepared as possible. Now, a little bit of a slowdown today, and I think that's an understatement. This morning was just, I think it took the bonds about 45 minutes to move more than 4 ticks. It's absolutely insane how slow it was today. The afternoon session did pick up a little bit, as we can see here on crude. Had quite a bit of movement going into the afternoon session there. Not to mention that we have API numbers coming out in a little bit after that. So we do have some things to look forward to, but man alive, it was slow. Now, before we jump into the charts, as always, let's take a look at the website itself. So swing on over to Slingshot Futures, scroll down, and click on the Join the Daily Outlook newsletter button right here, and that's going to add you to our email list. Now, on our email list, we're going to send you an email for this video. Every single time it comes out, you'll be notified. But along with that, we talk about different statistics, different stocks, even some cryptocurrencies like Bitcoin, Forex, all kinds of different stuff that we're looking for in the coming days in terms of possible trading ideas. At the bottom of the page as well, we have our daily posts that we make. We have the psychological videos that we break apart a single market, rip it apart, and figure out what made it tick, pardon the bad pun, and try to figure out, as much as we can about the inner workings of the markets. And of course, we have our live trader morning prep levels, which we post every morning for the Big Sixes as well for all of those levels traders. Now, if you haven't done so already, click on the live trading subscription and trial info box right here and sign up for a one-day trial. That way you can log in, you can see what we're about, and you can see how everything works. And if you really enjoy it, you can sign up for a weekly or monthly option. And of course, if you join as a VIP member, that comes as part of the package, so you never have to worry about paying anything ever again. Now, the bund was open today. We opened back up after the holiday yesterday, and we opened up with a small gap down and really didn't accomplish a whole lot. We can see that we opened up right here. They tried taking a dive lower and ended up closing up here, and that leaves a fairly bullish daily candle with only a very little bit of wick on the highs and a boatload of wick on the bottom. So the daily candle itself looks very, very strong to the upside. Now, if we zoom out a little bit, we can get a little more context on this, and we can see that for the last several days, we've been kind of sideways to grinding higher. So a really strong bull candle, well, that strong bull candle, if it were, in a different location, it might be a big deal, but right now, that really strong bull candle is inside of Friday. It couldn't even break out. So we're not really getting a whole lot of context here, other than the buyers are obviously still in control, and they're trying to buy, and they are buying aggressively on dips. But that's about it. We keep ending right around where we open up, and we just can't seem to get away from it. So a breakout is likely at some point. But, is it going to happen tomorrow? Maybe, maybe not. But we can anticipate that there will be a breakout at some point sooner than later. Until we get that clue, though, we have to treat it like a range: buy low, sell high. Now, in this case, it does have a slight bull bias as it kind of grinds its way higher. So looking for buying opportunities more so than selling. And for buying opportunities, I would love to see the bund dip down to 161.63 for possible buying support, as well as dipping below that to 161.53 if they really want to pull back to the lows. But either way, I don't want to buy way up here, not on top of monthly resistance. That's the last place that I want to be messing around with at this 161.80. So I'm looking for a little bit of a pullback, and if we can get it down to the 161.60s, or at least towards that area, I would be very happy with a buy right around that location for another rally back up towards the highs. Switching over to the euro here. Now, we can see that the euro caught a little bit of a rally off of the bottom. They tested monthly support at 91.90 and picked up quite a bit of speed to the upside. Now, we have some upside objectives at 95.94, which remains unfinished business. Now, right at this very second, we look to be kind of forming a slight little pennant, a little wedge after that big spike higher there. And a lot of times that occurs after one more leg of continuation. And this would work out pretty well, because very frequently what you'll see on these kind of legs is either the first leg or the second leg tend to be the biggest, and then the final leg ends up being a little smaller just to kind of finish the job off. And then from there, they may kind of trap around a little while and then start maybe pulling back. So it kind of makes sense here, because we have this big first leg up, we have about an equidistant second leg, and then the final leg would be nice and small to finish that job, and it looks pretty good. So in all honesty, what I would like to see here is the market to come back down, trap these lows, drop below that area into support of that rising channel, and then pop higher to finish the job off from there. So that's kind of the game plan here on the euro. Still looking to be a buyer, obviously, because the market participants are still buy side weighted, and it's, you know, pretty apparent that they own the market so far. But I wouldn't mind seeing that little bit of a trap below 94.70 just as a little bit extra, right? Add a little bit of spice to it so we can get that jump higher with a little bit more ease to finish off the objective high. Then looking over on gold, I mean, man alive, after that drop yesterday on gold, coming into today, you anticipate the day to be relatively range-bound. It's very common to see a huge day create somewhat of a range-bound scenario, and that's what we had today. There was still a little bit of a downward bias. The bears tried breaking lower, breaking lower, breaking lower. When they finally dipped underneath that low, they popped right back up again. So with that failure to go lower, that's further and giving us anticipation that sellers obviously don't want to sell low anymore. They've been short for quite a while, probably back here, even back here, or heck, even back here. And when that drop lower failed, they likely all exited around this area, and now they're looking for better prices. So the better price areas, what I'm looking for are the buyer objectives to finish, and that would be also an area where the sellers could look to jump back in, and that's going to be at 1260.8. And if they really feel generous, if we get a big pop higher, 1264.9 would be another beautiful area for possible resistance. More likely, though, we're going to find 60.8 either tomorrow or maybe within a day or two as the large area. Now, right now, again, the overall range sentiment definitely playing a part here. In the lows of the range and the highs of the range, kind of not the easiest thing to find in the world. The high point of the range looks best around 58.6, but we really only tested that once last night, and we haven't come back to it again. And that may just mean that it migrated a little bit lower, where we can see prices kind of bouncing right now. But as you can see, it's more of a short-term trend occurrence rather than a big range, because we have a nice bear trend down, they reverse, we go into a nice bull trend up. So drawing a range on this, not so easy, right? In terms of support, I would say that those lows seem to be pretty good. Also forming a little bit of a head and shoulders pattern right there. So 54.6 looks pretty solid. And in terms of resistance, again, it's kind of up in the air. There's so many different ways you could draw the support and resistance above, at least, that it's a little bit of a tough call. So all in all, I would rather look at the wedge that we have going on here because it makes a little more sense while those buyers try to work this out and get back up towards those major objectives. So still, in the short term, looking to be a buyer just to get continuation up to find resistance at 60.8 to then flip right back over to the sell side and drive the market back down. Over on the bonds, like we said, the bonds were slow is a massive understatement. It took a very long time for the market to get anything done. When it finally started waking up, we got some good trending movement out of it in the form of a spike into a channel to the upside. And we came back and retested that massive drop point where we kicked off that move down yesterday. So the fact that we're testing that area right below that 153 mark, 152.31, that's a big level of resistance. That's where all of the selling pressure started to the downside yesterday, and that's a big clue because now we're testing it again, right? It's almost like asking the sellers, hey, we're back, we're at the same price. Do you want it again, right? Do you want to defend it, or are you going to give up this time? So this level is kind of the line in the sand, 152.31. We need to stay below it for the bears to own the market, and if we break above it, we could end up using it as support for possible continuation to the upside. I love the fact that we made a higher low in terms of the bull case, but again, until we break away from this, it's going to be a little bit of a tough shoot to buy this high up. Now, for the buyers, they do have a couple options to work with here. 152.13 is a beautiful area to buy as a pullback, and if it really wants to pull down deep, since we are getting these deep, close tests of the lows, close tests of the highs, that 152.02 area is also on the table as a possible buy. Either way, though, we're in sort of a range looking to buy low, sell high. Especially if we zoom out, we can see that we're still stuck in the same place. But again, we're getting some clues that the buyers may be attempting to take over. They failed out of the lows, they came back up, used it as support, and now they're trying to gun back up again. And if we can break out of this, we may have some good buying pressure to get a pullback back up towards the attempt back at the 153.23 area. So we could have some running legs on our hands here for the bonds, but it all depends on what they want to do around that line in the sand. On crude oil, I mean, they just fell off the planet. We had some really good movement overall, beautiful bull trend, in fact, when we first started the day off. and they reversed, and it looked like, okay, it might just be a range day. We had a bull trend up, bear trend down, probably go back up to the highs, etc. And then it just kept going and going, and then this happened, right? That big breakdown, tested major support at 48.13, broke out again, and just continued to slam underneath that level. So now those levels of support from the 60-minute chart, from the daily chart, they're going to become resistance. So we're looking for selling pressure still. It looks like we have a little bit of a flag on our hands. And what I would like to see is an attempt down, trap in the aggressive sellers, pop higher to trap them out, and then get the conservative sellers in to finish off the move. 47.82 up to 48.13 are the areas of interest, and we're looking to finish off the objective down to 47.29. And then finally, the S&P. The S&P range bound, as always, it seems. The last couple days, we just haven't been able to get out of this range, and today was no exception. Now, the range is a little bit of a funny one here. We've got a couple levels that you can work with. The high looks best at 88 even, the low at 84 1/4, but you can also see they may be trying to build a new range low right there, 82 half. Now, a lot of times when they build those new ranges, all they're doing is widening it out. And again, the overall bias when we came into the range plays a role. We moved up into this range that we've been in for several days now, so chances are the buyers have a slight edge on this one, which basically means that we're looking to buy low more than we're looking to sell high. It doesn't mean that you can't sell high, but you may want to offset your entries. If you were going to sell here normally, you'd want to sell here instead, kind of thing. But again, the buyers have the general bias to the upside, and they have for quite a while. So we're just kind of stuck in this range. We need to break out of it to get something going, but until then, we've got to treat it just like we would any other range. Buy low, sell high. Slight emphasis on the buy side, though. And again, 84 1/4 down to 82 half seem to be the best looking levels at the moment. Not to mention monthly support at 81.75. So again, a range, we know what to do. Buy low, sell high, stay out of the middle. So that's going to do it for the overview. Now, taking a look at the economic calendar tomorrow, today we're coming back from the holidays that happened on Monday. We were hoping that, maybe we get a little bit of action, but it was really slow. And, well, now tomorrow we have a Japanese holiday, which is going to be taking place all day, and that's the Constitution Day. So the Japanese markets will be closed tomorrow, and that's going to cause probably another slowdown. Now, that said, today we didn't have any U.S. news. Tomorrow, we have a little bit to work with. So at 3:55 tomorrow, out of the European side of things, German unemployment change, forecasted at negative 112,000. Previous was negative 30,000. Negative 12,000, rather. At 4:30 tomorrow morning, we have the construction PMI out of the UK, forecasted at 52, previous 52.2, and then we get some US news. We have the ADP non-farm employment change, 175,000 is the forecast, previous was 263,000. At 10 o'clock, we have the ISM non-manufacturing PMI for April, forecasted 55.8, previous 55.2. We also have crude oil inventories tomorrow. The forecast for that is negative 2.333 million. The previous was negative 3.641 million. In just about 5 minutes or so, at 16:30, we have the API numbers coming out, which generally, lately it's been a little bit of an off shot, but generally the API gives you a more accurate prediction of what the inventories will be. Now here's the big one, right? The big one tomorrow, FOMC statements and Fed interest rate decisions. Those are the big boys for tomorrow, and really the afternoon trading tomorrow is completely off limits for me. I'm not going to be trading at all tomorrow afternoon. FOMC and the Fed interest rates come out at 1400, and again, the forecast for the Fed interest rate decisions is 1%. That's the same as previous. They're forecasting an unchanged event, but again, please keep that in mind. Tomorrow afternoon is going to be a mess when we start getting into that 1400 period, so just be very careful if you plan on trading a little bit later in the afternoon. But outside of that, that's going to do it for this one. So like we always say, make a plan, trade the plan, follow those rules, and you should be A-okay. Until next time, we'll see y'all then.